morning, treasurers. This is your host, Parthesh Shah, co-founder of Fintech, and you are listening to Night Snippets. Here is all what you need to know before going into trade for 22nd June 2021. In the international market, bond yields continued their volatile ride on Monday as well as investors tried to determine a multitude of factors including number 1, the rate of inflation, number 2, whether the economic comeback is slowing, and number 3, how aggressive the Federal Reserve will get in talking of its easy policy over the coming months. US 10-year closed 5 basis points up at 145 percentage points and 30-year closed 10 basis points up at 2.11 percentage points on Monday. Did you know that for China's 10-year benchmark is currently trading at 3.19 percentage points? 52-week low for China 10-year benchmark is 286 and 52-week high is 336 and currently trading at 319. In the crude oil market, crude is trading at $74.79. Short-term range for crude is $70 to $75 per barrel. In the currency market, dollar index or DXY is at 91.91. DXY's today's range is 91.51 to 92.55. As we had mentioned yesterday, DXY lost some gains. Now the tone is bullish and the next resistance is at 92.50. USD CNY or Chinese yuan is at 647. USD INR with a high of 74.28 closed at 74.10. USD INR's range for today seems to be 73.90 to 74.30. 74.30 is acting as a strong support for rupee, below which USD INR can trade up to 74.80 in near term. In the domestic market, bond market was shaky yesterday as well as market participants fretted over comments from some members of the MPC who sounded concerned about elevated inflation. Mridul Sagar said, if not for the current extraordinary circumstances, the committee would have shifted its stance to neutral from accommodative long back. Ashima Goyal said, the policy adjustment has to be gradual but not too gradual, adding that the excess of money growth is fueling inflation minor. With the concerns around inflation, 585-2030 closed at 603 versus 601 the previous trading day. 563-2026 closed at 565 versus 561 the previous trading day. Night research take on inflation. The RBI MPC minutes are clearly being considered as hawkish by many in the market. Inflation is likely to be sticky around elevated levels, which could bring forward the policy normalization by a quarter. October-December is ideal, but it will be data dependent. Trading range for 585-2030 would be 6 to 605. Trading strategy: wait before jumping the guns to buy 563-2026 at 565 as there is a steep sell-off. 664-2035 there is an ample demand. 585-2030 there will be 14,000 crore auction on Friday, which is a clear signal that RBI wants the informal rupees 1.20 lakh crore cap to be ignored for now and continue their benchmark yield control. That's it for today. You were listening to Night Snippets with Parthesh Shah, co-founder of Fintech. See you tomorrow with the new episode of Night Snippets.